I'm Iman Bakadari. Hi, how are you? Nice to see you, everybody. We have Yuval Greenblatt, executive, senior executive manager of sales here, Douglas Elliman, uh, and then we have Hal Gavsey. How you doing, Hal? Um, Also executive manager of rentals. We have Ron Reamer, senior lending officer at Citibank, and we have Gabrielle Correo, uh, valued member of the Bakadari team. So welcome everybody. Let's get this back up again. Okay, here we go. Let's get this back up again. Let's hide this. All right. So let's get started. So Yuval, it's an election year. We have a lot going on, of course. You know, the Fed monetary policy. We're watching it on a minute by minute basis. Such an interesting time to be in real estate. So I guess what's on everyone's minds is, do you think we'll see more inventory and competition as Fed starts to lower rates?
Yeah, if that question's for me, Iman.
Yes.
Yeah, I think it's even more so the importance of the elections. I think are interest rates really, because I think that what we've seen that interest rates have done was really kind of hold back supply. You know, and again, we've been discussing this for a while. Those, including myself, that are in these old interest rates at 3% or less, somewhat fixed as low as 2%. I spoke to someone. There's no real motivation for them to move that supply into the marketplace unless they really need to move. And that is one of the drivers of supply, where people upgrade or downgrade their property. And if interest rates are lower, they would, clearly be willing to give up that rate for a slightly higher rate in a different apartment. And we're not seeing a ton of supply creation on the other side. It's very difficult to build in the city. In Brooklyn, you see a little bit, but they're primarily small buildings. But interest rates, I think, are the biggest factor right now that are really driving supply. And if we look at supply is pretty flat for last year, which is a relatively reasonable amount of supply. It's about 6,600 units, give or take. But what's noticeable is that the new supply is trending at less than minus 10% so far this month. So we're not bringing on as much new supply as we ordinarily would for the spring selling season. So that is clearly negative, a positive to some extent for sellers. I think another interesting thing that we've been noticing is there's been a migration sort of trend. And we've had this downtown trend for many, many years. And then the Brooklyn trend sort of came in, where a lot of Manhattan buyers were moving to Brooklyn. But now we're starting to see a lot of that move back up to the Upper East Side. Lenox Hill has been one of the most popular markets now for 6, 7, 8 weeks running in terms of where search trends are at. So it's interesting to see these like real migration within our submarket, right? And I think that is important. But again, just on the election or interest rates for us are the most important factor. Elections, they'll come and go. They'll be, someone will be elected and we'll move on. They do, according to Jonathan Mill's statistics, they do sometimes slow things down because of the uncertainty, but then almost always rebound. It's historical. So there might be a slight slowdown until the results are out. And then regardless of who the president is, it seems to always snap back to exactly where it was before. So they're not that meaningful when it comes to our submarket. Certainly not as meaningful as interest rates.
Got it. Interesting. So it actually leads me into the next question. Wow, you covered a lot there. Thank you. So the next question I have for you is, how would you forecast the sales market for the rest of 2024, given everything that you just described?
Well, I think it's steady. I think that we've seen a spike in activity as we ordinarily do, but it's still generally flat. Like I don't
Yuval?
see any.
Oh, I think we lost you. Yuval? I think we lost Yuval. Hold on a second. Let me see how we can get you back, Yuval. Oops. What's going on? Sorry, we're having a little technical difficulties here. Lost. There we go. Are you back?
Yes, I'm back. I don't know
There we go.
what you've heard, but I think that just moving forward, I think we're seeing a steady marketplace with really good opportunities on the buyer side to get reasonable value for properties, particularly if they're willing to put some work into the property. But there is no huge driver of supply right now. What I was saying is, if interest rates come down and if the dollar weakens, we could see a very, very big boost in both supply and demand. And that eventually will happen. It's just a matter of when. But currently that's not the case. All we're seeing is sort of slow and steady, with a healthy amount of transaction volume occurring.
Got it. Got it. Very cool. Thank you. Thank you, Yuval. So now that we've kind of gotten very up to speed on the sales market, let's talk a little bit about rentals. We have our rental guru here, Hal Gavsey. Manhattan is such a hot rental market. We all know how important and sought after those great deals are. Everyone's running after those great deals in Manhattan rentals. So, we've been tracking the market now for the last few quarters, and it just seems to be on this upward trend. So Hal, our February report shows Manhattan prices are finally cooling off a little bit. It looks like not much, by 3.9%. And, it looks like inventory is up, though, substantially year over year based on our February report. So I guess my question to you is, how is the state of the market? Can tenants finally negotiate rent? Can they ask for concessions? Are we finally, in a place where we have some relief for renters? Oh, hold on.
Thank you.
There we go. Now we got you.
Hear me now?
Yeah, now we can hear you.
Great. Yeah. That's I think right now, just to how is the state of the market on the rental side? Things are definitely picking up as we approach the beginning of the rental market, which typically is May through August. Can tenants? You had said, can tenants negotiate the rent? We're seeing that. I think we're seeing more on the fee side, to be honest with you. But for the studio and one bedroom market, we're seeing new listings hitting the market with rents increasing. We've definitely noticed that segment of the market increasing. Landlords on renewals and new listings again hitting the market, they're pushing those rents yet again, just like they did last summer. We had several months where rents were coming down during the softer part of the market, from November through, say, March, but we're definitely seeing them inch up. Even though inventory has increased a little bit. I think piggybacking also what Yuval mentioned about the trends with the search neighborhoods, we're definitely on the rental side seeing Upper West Side, Upper East Side, and Midtown West has increased. And I think really the reason for that, most likely due to value. That's where renters are going to be able to find, I think, their best deals. So that's definitely what we're noticing.
Interesting. Thank you. So I guess that leads me to my next question for you is, what guidance would you give landlords who are preparing to put their properties on the market, given these numbers? Should they try to lock in, tenants for a long term? I mean, are we at the start of a cycle where rents are going to be falling, so you want to lock in people at the high rates, or should they stay closer to the market and maybe try to get 1-year leases in? What would you recommend?
Well, I think the guidance, if we're talking first to the landlords, the guidance is different because we tend to have, as I mentioned, landlords who are really, they know that the seasonality is back. They know we're coming into the real peak season of the rental market, and they're pushing these rents. So we have to maintain everyone's expectations and try to make sure that they're pricing them within reason. Because even though rents are down, have come down, as I mentioned, in the softer parts of the market, coming up to now, we're in April, we are still about 10 to 15% ahead of where rents were in 2019. So there's a certain threshold where landlords just can't push any longer. So that's a conversation we have with our landlords. As far as with customers, I would say my conversations that we're having with customers now, if they're looking to rent, definitely lock in now before we get into that full rental swing of May through August, because we are going to see rents increase and concessions will fall off as they always do. So if you're in the market right now, I think this is your best chance over for the next few months.
Wow. Wow. Thank you. That's so helpful. Wow. Thank you. So uh, sorry, let me go back to your screen here. So thank you, Hal. That's very interesting. Hearing from the experts is great. It's like I love your confidence in knowing exactly how the market moves and kind of predicting where we're going into the summer. And so basically, renters it's really more on the renters now to try to lock in.
Yeah, I think so. I think again, seasonality is back where we lost that for about 2 years coming right out of the pandemic, but now we definitely have our seasons. So that's how I would advise the customers.
Interesting. Thank you. Thank you very much. So, going to our next topic, actually, which is all tied together. You've all touched on some very important points with respect to financing and how we're all waiting for the rates to come down, which brings us to our next speaker, Ron Reamer. Ron is a phenomenal banker at Citibank. He's senior loan officer there for many years now, and he actually had done my previous two deals, so I really honor and respect him for his great performance as a banker. How are you, sir?
I'm good. How are you?
Good. So, you've all telling us that we're all waiting for the rates to break, right? Of course, that's going to make a big difference in our markets. But of course, you're in the current market, where buyers are currently looking to buy. So what would you say? Let's just start talking a little bit about the market with you. So how are rates trending now? What are you seeing in terms of mortgage application volume? How's it going?
Yeah, Ron Reamer, NMLS 33210, just to make it more official. We've seen rates unfortunately tick up the last couple of weeks. They're up about a half a point in general. I think there's some main drivers of that are obviously the 10-year yield, and the Fed is in their discussions have been pushing out potential rate cuts further into the year. We ended 2023 going into 2024 forecasting, the Fed was forecasting 6 or 7 rate cuts with the first potential in March. And over the course of the year, those predictions have changed. So, they've changed to potentially 3 rate cuts to 2, 1. So we have to see. It's more of a wait and see approach that the Fed has been taking. So now the forecasts are hopeful to have the first rate cut in June have changed to under, I think, 50% now. And July is looking like the more likely first cut. But the Fed is doing the wait and see approach, seeing what's happening with inflation. The economy is doing really well. So, when the Fed raised rates, that was to stop inflation. When you lower rates, it usually stimulates the economy. When the economy is doing well, they're hesitant to do that because they don't want inflation to sort of peak back up. Tomorrow is a very important day for that with the inflation report, the CPI index is coming out. So the Fed's going to take all the data over the next couple of months and determine, when that next first rate cut's going to come. Mortgage applications, we've actually been very busy to start the year, I think, compared to last year. My professional opinion about that is just because the stock market has been doing so well since November. I feel that a lot of customers are more hesitant to pull money out of stock portfolios and trigger capital gains, and are happy to take the rates where they are to avoid those taxable consequences.
Very interesting. So I guess that ties me to my next question for you. So if the rates are ticking up slightly, and but you're saying applications are kind of like going into the spring season, ticking up, I guess, is like normal seasonal trend, right? Like this is the time of the year where you're seeing more people doing their mortgage applications.
Yeah, I mean, spring market, obviously we're all get a little bit busier. I think that's, the seasonality is definitely here. Obviously it's tax season as well. So seeing a lot of customers have their paperwork ready, which is great because they're doing it for their accountants and CPAs, which is very similar to what underwriters need as well. So, I think, first time home buyers are the ones I've been speaking with. I'm just bracing them for, rate volatility. Because those things are going to happen, week over week, month over month. As we get more inflation data, the market's going to react to that within, what they're anticipating the Fed to do. So I think for buyers right now, with rates where they are, they can, hopefully take advantage of the market. And with, obviously a hope that rates come down towards the end of this year and into next year. But I think, buyers that understand that, where rates are now, and just being able to sort of stomach the peaks and valleys of the, the rate conversation. And hopefully we get some better news from the Fed in the coming months.
Right. Are you seeing a lot of people doing like adjustable rate? Like, what do they say? Marry the property, date the rate type of thing, or are you seeing that going on?
Yeah, a lot of customers are asking for ARM adjustable rate mortgage products, comparing them to fixed rates, that you can get an adjustable rate for 10 years fixed. So, it still gives you a good amount of time to obviously have a cheaper rate than a fixed rate alternative, and have that optionality to potentially refinance down the road, when it makes sense. But I think a lot of buyers right now, we're just seeing, what I've been seeing for the buyers I've been working with is still a lot of multiple bid situations for properties. So they have to work with their loan officer and the bank they're working with, try to strengthen their offer, maybe get, a commitment from the bank instead of just a pre-approval, to help separate themselves from the competition out in the marketplace.
Got it. Very interesting. Wow. Thank you. It's a very interesting take on the lending market. So it's still moving. Very good. Well, it's so refreshing to have it's so refreshing to have the experts, Yuval, and of course Hal and Ron, giving us these different takes. So in our team, we're of course in the market pretty much 7 days a week. We work nonstop, and between Gabrielle and myself, we're kind of seeing a lot of things on the ground. And as top brokers in our company, we were just awarded a Pinnacle team for 2023. We're in the top 3% of the company. So, what we're seeing actually is things that we would love to share with you. So I have Gabrielle here, Gabrielle Correo. She's a valued member of our team. Gabrielle is extremely good at extremely good at doing deals. She's one of the foremost experts. I really enjoy working with her. How are you, Gabrielle? How are you doing?
Good, thanks, Iman. Yeah, I really enjoy working with buyers, actually. It's quite fun for me. I love seeing properties. I love the process of, being able to help people find their dream home. And so it's definitely something I enjoy. I would say, Iman, do you have questions for me?
Yeah. Sorry, we're just about to get started. So yes. So what buying trends are you seeing in the market right now?
Yeah, great. So definitely seeing a lot of activity with buyers right now, a lot of people starting to shop. Just to echo what Ron said, just the level of buying activity is really high right now. A lot of people are first-time home buyers coming out to the market for the first time, which is typical of the spring market. But what I'm seeing right now is that, with the news coming out from the Fed that interest rates should be lowering soon, even though it's not as soon as we had hoped. Just the perception of interest rates coming down is enough to encourage buyers to come out and start shopping. So a lot of activity in the market. We are noticing that, similar to what Yuval said, a lot of downtown locals are starting to look uptown. So Uptown Manhattan is now the highest search neighborhood for buyers right now. So I'm working with people that would typically have never considered Uptown, looking uptown. I think that has a lot to do with trends that were affected by COVID. So people are looking for more space, which you typically find Uptown, you can get more space for your money. And people are looking to be near Central Park. I think people are really realizing the importance of being outdoors and close to nature, especially with work from home. They want to take their breaks and go outside and, just be having a lot of space and be in nature. So definitely seeing that trend. I'm seeing buyers who were usually focused in one neighborhood going to other neighborhoods. So they're expanding their boundaries. I have one buyer who was focused on Columbus Circle. So typically we would only look in that area or, neighboring areas, Upper West Side, Hell's Kitchen. They ended up buying in the East Side. So just completely different neighborhood. And they were able to find the space that they wanted within their budget. So I'm seeing more flexibility and boundaries. We're also just going back to the work from home trend. People are, couples are both working from home. Let's say they both need their own space. So within the home, the layout is becoming very important. So there needs to be separation of workspace. So they need not only a space in the bedroom, let's say, for a desk, but then they also need another area in the home where they can put a second desk. So I'm just seeing a lot more attention being paid to floor plans and like how much light the apartment is getting, how quiet it is, that sort of thing, where those things were always important, but now just buyers are really focusing in on those aspects of the home. So that's where staging becomes very important. I think sellers need to be mindful of these things that have become so important for buyers. So if you can stage the home in a way that reflects how usable the space is, that's super important. Um, and yeah, I would just say um, a lot of activity in general in the
Very
in the
nice. When you said uptown versus downtown, can you qualify the neighborhoods that you're referring to uptown?
Yeah, so I would say uptown meaning Upper West Side, Upper East Side, close to the park, Columbus Circle, Central Park South, areas that have parks near them. Not so much upper Manhattan, but you're just like the prime neighborhoods in Manhattan. So up to 96th Street, down to let's say 55th Street.
Nice, nice. So I guess given what you just described about the buying patterns and how buyers are shifting and looking at properties in different ways, like what advice would you give buyers who are thinking about buying?
Yeah, I think the market is really sensitive to interest rates, like Ron said. So very first thing I would do as a buyer is just talk to the banks, talk to someone like Ron Reamer, who's an expert in mortgage lending, who can walk you through all of the options and financing right now, and just be really diligent about shopping the rates with the different banks, because that's going to allow you to build your budget if you're financing. So you'll understand what you should be looking at in the market. And yeah, of course, just like the same thing applies for all situations. When you're a buyer, you need to have a top attorney ready to go. It has to be a New York City specialist who only does transactions in New York, someone who can be ready to receive a contract because things are moving quickly. So there's not a ton of inventory, like you've all said, coming on the market right now. So everything that's priced well, that in a good location, that doesn't need it's a high amount of renovations, that inventory is moving quickly. So you just definitely want to be prepared to have your pre-approval letter, have an attorney that is ready to receive a contract, and just be ready to go if you find a property that you'd like, because we're not, I'm seeing some bidding wars, but definitely a lot of high pressure situations for sure. Did I lose you?
Beautiful, thank you. Sorry, just trying to get our technical aspect of our live broadcast all set up. That's great. Thank you, Gabrielle. That was so interesting. It's fascinating to see that the Upper East Side is sexy again. That's great. It's for all these years. Everybody wanted to be downtown, but it seems like we've hit this market where there's a lot of value and people want value, so they're changing their tunes. That's great. So I just wanted to sort of speak a little bit myself, a little bit about how the market is going, with respect to uh, sellers and how the sellers are moving. So why don't I talk a little bit about, for instance, what trends are developing for sellers? I just wanted to give you sort of my top few points I wanted to share with sellers in this market. Right now, pricing, of course, is an interesting exercise to do for sellers. How do you value a property in a market where your interest rates are higher and you're using data. We're about 2 years now into the high interest rate market, so we have some pretty good data to suggest where the prices have moved ever since our rates have gone up, and the cost of mortgages have gone up. Of course, the third quarter was a record quarter for cash deals. Everybody tried to, as far as the buyers tried to avoid using financing because of the high financing rates, but there was definitely a fair amount of financing in addition to cash. But it's really more where the numbers fell and how that worked. So what we're doing basically when we're pricing an apartment is we're forecasting what type of market we're entering. So really right now, I think focusing on being priced well is one factor. The other thing is looking at the market as a seller too, and understanding where you're entering the market with your competitors. Like suppose there's 15 or 20 apartments in your price range in your general area. Where do you fall in that range? And I think that's an important factor to consider. The other thing is the idea of doing repairs and renovations has drastically changed the valuations on properties. And when I say that, the cost of renovations, the time it takes to renovate during the pandemic had increased, and so it's much more difficult to get things done now than it was, let's say, in 2019. So buyers out there are reluctant to want to pay good prices for properties that need work. So my suggestion has been really to sellers more than ever to, that's one of the things we do best, is trying to advise on exactly what things you should do and what things are not necessary. Because, there's kind of that fine line between overspending that you can't recover the money from repairing and, fixing certain things about your apartment versus other things that you 100% should be doing. So I think that's one of the main factors. But generally speaking, right now, I think just really tightening your strategy as a seller. Properties are selling. We've had record numbers at our open houses on some of our properties, so we're definitely seeing people back in the market. And offers are happening. And the other thing which I think was interesting to discuss is if priced correctly, how long does it take in the current market environment to sell apartments? And there is a seasonality to time on the market. Statistically, the spring season is the busiest time of the year, so apartments tend to sell more rapidly during this time of the year. But just looking at our first quarter market report, I can tell you, for instance, the average hasn't moved much year over year. Last year, first quarter of 2023, it was an average of 75 days on the market. In 2024, it's dropped to 73 days on the market. So I would say it's pretty stable when it comes to looking at how the overall market is moving. But really what determines your days on market is how you're priced. If you're priced really well, then you will actually sell much faster than your competitors. Because if you're lining up with 20, 25 other apartments to sell in your price range, in your neighborhood, how do you fast forward to become number one? So these are the strategies that you have, certain things at your disposal that you can try when it comes to pricing. So I would say generally the numbers are pretty accurate. It takes about 2 to 4 months to sell a property. I want to thank all of our incredible speakers today. Our 30 minutes flew by. It's unbelievable how fast it flew. I just want to go down and just thank Yuval. Yuval, thank you so much. It was so incredible to have you speak about the market. You're always such a wealth of information. Thank you. Hal, everyone is after those hot rentals. And, when you have experts like Hal guiding you, there's no way you can fail. So thank you, Hal, so much for your great knowledge. Thank you. And of course, Ron, Ron, if you're out there looking to finance, highly recommend talking to Ron. I think he's a great candidate to give you guidance and tell you how the market's really moving. And then of course, Gabrielle, thank you so much for giving us so much insight into what you're seeing with the markets. So thank you all. Thank you all for joining us. This was a great meeting. And if you have any further questions, feel free to let us know. So this concludes our live market discussion. If you have any questions or comments, feel free to contact us. Thank you very much.